The ongoing trade conflict underscores the fragility of the U.S. automotive sector, which relies extensively on Canadian exports for critical components. This reliance signals a potential economic transformation. Moreover, the automotive sector serves as both an economic foundation and a political battleground, influencing voter demographics and economic stability in both nations. The ramifications of this conflict may significantly alter political dynamics. Canada's strategic tariffs target key materials essential for electric vehicles, including nickel and lithium. This approach directly affects U.S. automakers' efforts to transition towards electric mobility, potentially stifling industry growth and innovation. The effect of these tariffs on Tesla exemplifies the precarious position of companies that heavily depend on Canadian resources for electric vehicle production. Such disruptions prompt concerns about Tesla's capability to preserve its market standing. This trade war is not limited to Tesla. It also impacts major automakers like General Motors and Ford, which similarly rely on Canadian materials for electric vehicle production. Consequently, the entire electric vehicle market faces significant uncertainty. Furthermore, Canada's dominance in natural minerals and energy resources could reshape the North American automotive landscape, indicating its desire to no longer play a secondary role. This shift may have enduring effects on U.S. automotive supremacy. As the trade war continues, everyday essentials are likely to see price hikes, with the auto industry's challenges spilling over into related sectors. This development could substantially affect American consumers' daily experiences. Additionally, as tariffs increase, manufacturing costs, particularly for electric vehicles, are expected to rise. This trend poses a considerable threat to companies like Tesla, GM, and Ford, which depend on specific raw materials. The used car market is witnessing a surge in demand due to escalating new car prices. This reality may create financial strain for middle-class buyers, as the costs for used vehicles continue to soar. In addition, rideshare companies and delivery services are grappling with heightened expenses due to rising transportation costs, which impact their pricing strategies and overall business models. Moreover, China and Mexico are emerging as pivotal beneficiaries of this trade dispute, fortifying their positions within the global auto supply chain while U.S. manufacturers navigate turbulent waters. President Trump's proposed tariffs on Canadian cars may inadvertently backfire, possibly instigating a cycle of economic warfare that threatens the North American auto industry and jeopardizes jobs. Ironically, the tariffs intended to safeguard American jobs could result in factory closures, predominantly in states like Michigan, Ohio, and Kentucky. Job losses could severely impact communities dependent on the automotive industry. This trade war has instigated a political blame game, with leaders from both sides utilizing the situation to advance their agendas. Trump supporters advocate for tariffs as a necessary measure to reclaim manufacturing dominance. The delicate state of global supply chains exacerbates challenges for American automakers, particularly as electric vehicle costs escalate.
Hike-Tenet tariffs mai impede the progress toward a cleaner automotive future.
Additionally, disruptions in energy supplies from Canada could lead to rolling blackouts and power shortages in major U.S. cities, presenting serious risks to public stability and safety. The complex supply chains integral to the North American automotive industry complicate efforts to reshore production. Implementing such changes demands significant time and investment, making quick transitions nearly impossible. Ultimately, the U.S. faces a critical choice: to stabilize trade relationships or gravitate toward isolationism. This decision will have profound implications for the future of its automotive industry and overall economic health.